Well guys, it has been absolutely brutal out there. All your small cap stocks, including one of the ones that I own, like Corsair Gaming, Tattooed Chef, CleanSpark, all these companies are getting absolutely destroyed. It is getting really ugly out there, and it makes me want to grab a Mountain Dew because it is getting absolutely brutal. So wish me luck guys. Hopefully these recoveries will start to happen a lot sooner rather than later, because right now I'm getting absolutely destroyed. But let's go ahead and jump over here and let's take a look at the different indexes, because there's four main indexes to look at. And the main three that normally people look at is the Dow, the S&P 500, and then they also look at the NASDAQ. Now, if you're not familiar with these three indexes, the Dow is more focused on a lot of your old schooler, more focused towards the economy. If you're not familiar with the Dow 30, it's really a good representation of our economy, and it's really economically driven, and it has a lot of our huge powerhouse companies in there, from Caterpillar to Apple to Honeywell to lots of other names. Now go ahead and take a look here at this ETF on Robinhood. This is ticker symbol DIA, which is a representation of the Dow Industrial Index. Now you can see over the last year that it's pretty much been up and away, and it's hitting new all-time highs, record after record, day after day. It's pretty much been non-stop. And then next up, we have the second index that people tend to look at, and that's the S&P 500, and the one that I like to follow closely. The S&P 500 has the top 500 companies, all the same 30 companies as the Dow, except it's much more diversified. It's a good representation of the stock market as a whole. Go ahead and take a look at this. This is the SPY ETF, which is once again just an ETF that represents the S&P 500. If you go ahead and take a look at the year chart, it's once again same thing. Day after day, week after week, month after month, it is in a pretty much straight line up, hitting record after record, non-stop without a hiccup. And then last but not least, we have the third ETF before we get to the one that's really about this video. We have the NASDAQ, and the NASDAQ has a lot of the same companies as the Dow and the S&P 500, except it's really tech heavy, really focused on a lot of those tech giants like Google and Facebook and Apple and a lot of other big names like that. Go ahead and take a look at the QQQ. The QQQ is an ETF that is tech driven, that is focused primarily on the NASDAQ. It is supposed to track the index for the NASDAQ. Now go ahead and look at this, same story, once again, record after record, day after day, non-stop, no hiccups whatsoever. And if you're looking at those three main indexes that a lot of investors tend to look at, well, you would probably think, wow, the stock market is doing incredible. And it is, sort of, but not really. Let's go ahead and take a look at what this video is about, and that is the Russell 2000. Now this is a year chart for the Russell 2000. You can see that earlier in the year we kind of ramped up a little bit, but now I'm going to go ahead and go over to Webull. And this is a representation of what the IWM ETF is, once again another ETF that tracks the index, and this one tracks the Russell 2000. Now if you look at this throughout the rest of the year, from January 1 all the way to today in August, it has done almost nothing. It's went up, it's went down, but it's basically traded sideways and went nowhere for 8 months straight. And so a lot of these small cap companies are going down in value. And that is an opportunity for me as an investor to take advantage of these small caps that are getting absolutely destroyed. There are so many names that are down 30, 40, 50, 60%. Now the Russell 2000, if you don't know what that is the top 3,000 companies in the world. So you take the top 3,000, eliminate the top 1,000, and you have number 1,001 all the way down to 3,000. So this is the top 3,000 companies in the world, excluding the top 1,000. These are a lot of your smaller companies, including lots of the ones that I own. Actually, all three of them are in the Russell 2000. CleanSpark, Corsair Gaming, Tattooed Chef are all three in there, the three positions that I have right now. Now, what am I doing with this? If we go ahead and take a look at a lot of these smaller cap names, you can see that they are getting absolutely destroyed. And so let's go ahead and take a look at some of my order history that I've done over the last couple days and how I'm taking advantage of this market going down on these small cap companies. Now you can see first up here, the first thing that I did is that I sold a 17.5 strike put on Tattooed Chef. It got absolutely destroyed the other day on its earnings call. And in my opinion, it was completely unjustified for Tattooed Chef to get hit as hard as it did. Its earnings call was not that bad. We went over its profitability issues that it had last quarter just a week or two ago. If you didn't see it, go check out that video. But basically, the numbers weren't nearly as bad as people were making it out to be. They're pretending like this company is about to go bankrupt or something. And so what did I do? The moment that this company started to tank and it had its worst day in trading history, I sold a put for the company so that way I could get paid to wait. And then guess what? If I end up owning those shares, if I get assigned to me, then I just own another 100 shares of the company and it might lower my cost basis. So that's what I'm doing with my first position, Tattooed Chef. And then let's go to the next position. Let's go to CleanSpark. Now, I sold a put on CleanSpark, agreeing to buy this company at $10 a share, and that goes all the way out to June of 2022. I sold a 10-month long contract. Now, the good news is straight up, this is why I love this small cap stock. It is so volatile, it is by far and away the most risky, but the options contracts are ridiculous. Those of you that know me know that I try to target 1% of monthly premium. So for a 10-month contract, I want to get 10% of my money. The strike is $10, so that means that I'd need to make at least $1 per contract. Well, I made a little bit more than $1 per contract. I made $3.40. Times that by 100, I made $340 to write this contract. And so that's the beauty of options investing, is that I'm okay owning the stock at $10 a share. I was okay owning it at $13.25 where I started my position at. So buying it at 10 is a much cheaper discount. But the reason why I wrote a contract so far out is I don't think I'll get assigned on this. But if I'm wrong, I'll buy those shares happily and I'll pocket my $340 today that I can mess with that money towards putting towards other stocks. And then last but not least, we have my biggest position. We have Corsair Gaming. Now, my whole portfolio is structured obviously around selling options, and so that's exactly what I did. Go ahead and take a look at this. You can see that I sold another put on Corsair Gaming, and it is at $25 strike, and it's expiring about a month from now. Once again, going for that 1% target. I definitely met that goal, selling it for more than that. And more importantly, I kind of want this to execute because then I get to buy more shares at a discount. Same thing with Tattooed Chef. It gives me a lot more leverage if these execute, and if not, I just pocket the money like it never happened. And then I also did something that may surprise you guys. This whole portfolio is focused around options selling. I actually did an options purchase. I know I won't be doing a whole lot of this, if any. This will probably be the only options buy in the portfolio. I actually went long on an options contract. I spent $975, well actually $966 because Fidelity is awesome, gave me some price improvement. But $966, I basically bet $1,000 for an options buy for a $20 strike expiring in January 2023. And this is a little bit more risky, buying options rather than selling them, but I'm willing to take that risk because the way I look at it, buying at the price that I bought at, if Corsair Gaming is $40 a share by January of 2023, then that's a double up on my money. And if it's further than that, which I think it will be by January of 2023, then that is over a double up on my money. So to reiterate guys, the Dow, the S&P 500, the NASDAQ, all three of these ETFs, I'll go ahead and show them on the screen again. The DIA ETF, SPY, QQQ, all three of these indexes are rocketing higher. Day after day, month after month, week after week, they're hitting record after record after record after record. But if you go to the IWM ETF, this stock index for the Russell 2000 is pretty much doing nothing. And when it's doing nothing, that means that these companies are growing in revenue, they're growing in profitability, at least the good ones anyway, and these valuations are not going anywhere. And so a company like Corsair Gaming, my largest position, is growing revenue, growing profitability, and is trading for rock bottom prices. And the same thing goes for all three of my main positions. And stay tuned because we're this close to adding a fourth position, and you may be even seeing that in my next video. So thank you guys for watching. I appreciate you watching all the way to the end. Go ahead and get signed up with any of the links down below. Go ahead and check them out if you want to do any of that. And go ahead and subscribe if you want to follow on with me and watch how I earn 1% in monthly premium from selling options contracts and also own underlying shares of amazing companies that I want to own for the long term. Thank you guys so much for watching, and I'll catch you guys next time.